SBA EIDL 5 million plus alternative business funding, 10 billion in grants, PPP, EIDL, ERC, and so much more in pro tips I will be releasing in this video here shortly. But before I do, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been able to fortunately and so gratefully help and bless a lot of business owners in helping stimulate the economy through them, and of all backgrounds, of all industries, and so forth. This is a spontaneous live. I think I put that in the title. So in case you didn't see me broadcast this out to you, this is the reason why. I had no script today. I had no actual way of saying, hey, today I'm going to actually get on video. In fact, I've been filling out questionnaires. I just got off a phone call with a great human being. I got to talk to him a little bit about life and his business and what we're seeing in the current economy, especially with the EIDL. So I wanted to speak a little bit about that. And then I'm going to be jumping into some quick alternatives, what these services are. I won't go too specific into each and every one of these services in this video, but I'm going to let you know that these are available and that you shouldn't be waiting too long because of this quote unquote impending recession that we're about to just go into. Inflation, we haven't seen the worst of it. This recession and so forth. And I'm not here to scare you or say this in an aggressive way, but if you're not prepared today with the quote unquote right type of funding, you will be falling far behind. So let me know if you're watching right now in the, in the replay. Please in the comments, give me a hashtag live so I know you are here. And if you're watching later on the replay, hashtag replay. I do see who does that. Sometimes I don't get right to it and send you a comment, but I will respond back. And in case there are some spammers out there that will comment, I'm not associated with them. So just be careful when you read the comments when this is uploaded to YouTube. Some people will just go out there and tell you, come to Telegram, come to WhatsApp, come to Cardi B. I just made that one up. Okay. But just be careful, be aware of your surroundings and your environment. But here you're in a safe place. Like I tell most people is I have my hand over your shoulder. I'm taking care of you. I'm not going to loan shark you. I'm not going to put you in a position where it hurts you with your cash flow. Even if it doesn't, why would you want to take a way higher interest than what you should? I know specifically if you should be receiving 80%, 70%, 60, 50, 40, 30, 20, 10, and less than that in percent of interest and or a rate. I know without a shadow of a doubt, I can get you a ballpark before you even get an official offer. I know what the expectations are because I work with the best underwriters and lenders out there in the industry, bar none. So not to go too far off on a tangent, but if you didn't know the EIDL, there's nothing happening there, no movement. People have been asking me about the queue. What does that mean? So that's where people have submitted an increase, a reconsideration, an appeal, loan modification, etc. And they're being evaluated for, not so much the ones who try to appeal and they're not being analyzed or evaluated and highly considered for it. So if you're in the queue because of an increase, reconsideration, or just a second increase, or maybe it's your first, which really is not the case with this one, then you are possibly stuck in that queue. And not a lot of people are receiving their funding right now at this time. So a lot of requests, Congress, through the states, a lot of people publicly have been wanting to demand that it reopens. And there's been some talks, but not too much. There's other COVID relief bills right now. There's some in the past that they're still trying to figure out how this one conflicts with this, because there's stuff with like the Restaurant Revitalization Fund and then the ERTC program. And there's a bit of everything going on right now. But I'm going to be getting into a little bit more details later on if anything else surfaces. And then the 10 billion in grants, which I released, went live yesterday. So that video will show you more, but I'll touch upon it here. So EIDL, not too much, nothing's moving. What I recommend as a business owner is to think about, before I give you these services, is what are you exactly using these funds for? I got off a great conversation, like I said, with an individual. You may be in here watching. I won't say the name. But the behavior of our conversation, we went into the EIDL, how we received EIDL, and how there's going to be a lot of people, and I knew this already, that may not be able to repay it back. 30 years should be more than enough time. However, it's the way you use your funds. A lot of people are using this as an income source, using it as the way to go and gamble, to use it as a way of making more withdrawals on top of what you can already sustain in your business. How do I know this? I see bank statements every day. I evaluate them, I analyze them. I had to shut down business owners for gambling and for other reasons that I can't talk about. I can't disclose that. And at the final decision, bank verification, guess what? More was going out of their account than was about a week or two ago, and we had to decline offers. And that happens repeatedly in this industry. So be careful. When I say EIDL, EIDL was used for COVID relief. You're using this funding for business operational, payroll, you lost employees, you need to get more people, for debt, consolidation, etc. You're looking for the use of funds to be primarily used for those sources and more. You're just trying to stay afloat. You're already hurting cash flow wise. Profitability, probably you've gone back or you're trying to sustain it. I mean, maybe you're up, but before you go to a position where it's even lesser than what you want to see, what is normal, you've been approved because of COVID, because of the things that are happening with COVID. And now we're kind of over that. This is why a lot of the government is not pushing more EIDL funding, and because of the banks who are trying to have their reserves more limited to certain industries because of this quote-unquote impending recession. That's the real reason. And they want to protect themselves in the case of the rates going up, and it could about another point or so, from 4.75 to about 5.75%. And it wouldn't surprise me, even if it weren't 5.75%, just a little bit low, even less than 1%, but just 75 to 1%, percent to 1%, 0.75, I should say. Or it can move up another 1.75%. We've seen what's happened. And so anything can happen between the 0.75 to about 2% or so range. So just understand that right now is the time. A lot of business owners who I speak to may already have been approved by the bank, probably receive funding through the SBA with EIDL. Maybe you have a line of credit option available on the table, but you want me to look at it and say, hey, is this the best way to go? I honestly got on a phone call, like I said earlier, and I felt for him. Like, I've been in his shoes, but most importantly, I don't want you guys to be a victim of it. He told me about people trying to loan shark. And before I ever said a word, I was processing it in my mind, listening. Not what I wanted to say, but listening. And what I had said back is just be careful, because there are a lot of these loan sharks. And I came up with an example where a business owner was receiving so much of a term they shouldn't even have received. The funding amount was more correct, but their amount in the term was so high, it didn't make sense. But when I looked at the rates and I calculated myself, I didn't have to look at what they had. I calculated it from a daily, weekly, biweekly, and a monthly repayment, what it would look like over the duration of the term. What did they happen if the early payment discounts took into effect? There was that. Oh my. Somebody here is paying over 90% in interest in rates, where instead you could have probably received about 1.49 rate, maybe 49, maybe 40 to 49%. And I get that's still a little high, or on average 38%, but your details have to look clean. This is the difference between EIDL loans and you going to a private lender, a non-private lender. It's completely different. A lot of you guys are stuck on, well, I was supposed to get 350,000 and I didn't get it. And then there are individuals who go, yes, I was supposed to get that, but I realized I need funding. Where do I turn to? There's this Michael guy, and can I trust them? 100% you can. And in time, hopefully you'll allow yourself to. It's hard for me. I'm an introvert, and I know how difficult it is to get on a phone call, let alone communicate a lot like that. But I'm here to help you in the best way possible. So now let's go away from the EIDL and what are these 5 million, 10 million, same day, instant approval, up to 2 million, incredibly fast funding without collateral, no hard credit checks, bad credit is acceptable. And get this, low documentation. And again, like I said, stick with me until the end, because I'm going to give you some pro tips to take home with you if you're not already at home. I am. I'm fortunate enough to be able to work from anywhere. This is my business. You guys are everything to me. And I say that in the most humane way. I don't say it in like, oh, you're only a number to me. You're not a number to me. You are a human with emotions, thoughts, conscious, subconscious. And then we can focus on helping you in your business. So it's not like I don't talk about the business, which I do a lot of, but I focus and I want to understand you for who you are. What do you have going on this weekend? Oh, you're hanging out with your friends. Oh, you're going to a pool party. Where at? That's cool. No, I've never been there. So it's not like I just say it. I care. My community, I speak with them all the time. And you want to trust somebody who just doesn't do this, blah, 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 talk and talk and talk. and just say things just to say them. That's not me. I'm an introvert. I'm very cerebral. That's how it tells with my questionnaire when I submit it to you guys. So one thing you guys can do very briefly, and then I'll go into it, is I have a questionnaire. I'll probably get on the share screen in a moment to show you how that looks. If you haven't submitted this, what it is you can get a personalized and customized email response on your best funding option and options. Very thoroughly broken down from an introduction where I ask you how you're doing, how are things going, hey, and then how's your business? And if there's something more I need to ask, I'll be like, what are your exact use of funds for this expansion project or projects? Are you possibly rate sensitive? What are your expectations in the term? Just a little bit of that. And then I go into just telling you, hey, this is what's the expectations. These are going to be all the services you look at. Take time to go through them specifically in each and every one. You see one, you're going to be like, oh, that's the best one because I'll put it. But you'll also want to see the other one and say, oh, this is the reason why I wouldn't qualify. Or this is why this one wouldn't make sense to me. Michael knows what he's doing. And I'm not speaking about, I don't ever speak about myself in the third person, which is kind of weird. I said that, but it's me being confident, not cocky. I've never been that way. You can tell, you can talk to the people that are closest to me. I'm not. So I'm very humble. I'm grateful for you guys because you guys are everything. And so that questionnaire form will be down below. You can fill it out in less than 30 seconds. And again, you're working with an expert. Some people are like, well, I don't want a 70% interest. But the reality is, if you go through a private lender, that's all you would possibly qualify for. Now, if you didn't go through a private lender, I'll show you those. I'll probably show you a home equity line of credit. There's possible cash out refinances. Can you even go through your bank? Because that's where I would start with to begin. And if you already have a bank loan and you're looking at a private loan, what's possible? Possibly you're on a monthly repayment or you're only on interest only, and that can depend on the industry. Or you're being on a weekly repayment over here, but we can probably come in here with a monthly repayment, but not a weekly, or a daily, but not a weekly or a monthly. So it all depends on what you already have concurring and going on. So that questionnaire form down below, you can have a better look at it. The $5 million in business funding. Now, it'll vary from service to service, lender to lender, brokerage to brokerage, excuse me. But you have options, and I'm going to start from the shorter terms to the longer terms. So some of this you may be like, well, I've heard of that one before. I don't want that short-term option. Just hear me out. I'm not pressuring anybody to do nothing they don't want to. What has to make sense is the benefit exceeding your repayment. If it's always about, well, there's no benefit to me taking this funding, well, then it makes no sense to take it. Bottom, done. Conversation almost done right there, or it's already over. If there's no benefit of you taking what we probably offered you, or if before you even receive an offer, there's no reason to apply, or at least apply for that specific service. So when the benefit doesn't exceed the repayment in a lot of cases, people turn to a line of credit because they know they can take and use the funds and use them however they want. It's kind of like the EIDL loan in a degree, although the EIDL loan is not a line of credit. It's more of a lump sum. Well, with the line of credit option, what happens is you can repay it as you go. And so you only pay toward the principal and the interest, of course, but you're paying on interest forever how long you have the money out. So for example, you get approved for $50,000, but you only want to use $10,000 of that. So how is that similar to the EIDL? A lot of people sit on that money and they say, I only want to use $10,000 of this. But the EIDL has programmed so many people in such a bad way. And I'm not a proponent of that program. It helps, but to a degree. See, if this EIDL loan was able to say, hey, we'll give you a minimum of this amount, and then you can come back and reapply, but we need to have you use these funds this way, or we need to see you use them correctly, use them strategically. Do you have a plan? No, I just need money because I need to recover my business. But do you actually know what would be that return on investment, if anything, in the short and or long term? See, people prepare for the short term. Are you really preparing for 10, 15, 20 years from today? Not a lot of people are. But the ones who I see that are, like the individual that I spoke to today, and many, they're preparing for the longevity of this. So COVID not necessarily is short-term, it's long-term thinking because of a 30-year term. You don't have to necessarily use the funds the first year, but too many people don't know what they're using those funds for, and they can't make the repayments back. Their overhead is just so high, they underestimated what they were taking and how much debt they're in. Now, positive debt has then turned into negative. It was always negative debt because it's COVID relief. It's not growth and expansion money like some of these other options I'm going to be getting into. So When you're talking about a line of credit, in a sense, it's similar, but a lump sum line of credit, but the same thing. People are using it. Most people here, you get qualified for it for, yes, COVID relief is a factor, but the lenders, they want to see at least 50% or more used for growth and expansion. Yes, I need payroll, I have debt, but then I also have growth and expansion. Sure, you can say that, but is there something that you have? Is there a plan to use this money for growth and expansion? And if so, what will be the return on that investment in the short term and or the long term? Nothing, just building maintenance, which helps business operational. Okay, so where are we going with this in about 3 months from now? So this is all the stuff that I ask, that I sit down with my lenders and my underwriters. And this is a big reason a lot of people get disapproved for it. I've had business owners who didn't have business credit, and you have to have that with a line of credit. At least have it established, build some accounts, 3+ accounts, build trade lines. Show that you just don't open up a DNB and then just let it sit there. You're not working on it. So you'd be classified as having a thin credit profile. Yes, you started having business credit and you didn't show us another way. So you have a strong enough FICO, maybe it's 600 and above or 700, but over here, there's not creditworthiness. When we check your commercial credit, when we look at your business credit, Dun & Bradstreet, if we look at all 3 or so credit bureaus, we're seeing what's happening in those reports. And then if we look at your FICO, we look at all 3 consumer credit reports, what's being reported, and those a lot of the times can be a soft pull in this line of credit world. It's not sufficient enough. Or you already have another prepayment. You have a UCC lien. Oh, the background check. Something happened maybe a long time ago. No matter how long ago it happened, the lender will not take a risk with you. What if something like that happens again and then you're out of business? You're not the one operating anymore, whether you have a co-owner or not. Minimal inquiries you have to look at. Credit utilization ratio being low. Debt to income. Again, the minimal inquiries. No late payments. Clean credit. Bankruptcies, foreclosures, liens. They don't want to see that in at least the last 3 or so years, but at all, if any, get it removed. I have a lot of people in credit repair right now. So if that's something you're interested in getting an understanding with and getting one of the best in the space when it comes to credit repair, I used to do quite a bit of that, but I've outsourced it to an individual who does an exceptional job and I would trust. Then I'll leave for you a video review that I did down below where you can learn more about how to get your credit repair. But don't just say it and not do it. I have business owners every single day who tell me, yeah, I think I do want to do credit repair. Can you send me the information? And I get you might not do it right away. But when I follow up later on, maybe not right away, there's no feedback. You become Homer Simpson when he goes into the bushes and does this. Or Casper, the friendly ghost or unfriendly one. So feedback to me is everything, everyone. Like when you submit a questionnaire form, I'll respond back to you. I'll send you a text message. So preferably your mobile number is preferred and I won't harass you. I won't heckle you. No pressure. What I do is then I follow up with you in a text and I say, hi, James. Hi, Sally. This is Michael, the business loan broker. How are you doing? I just wanted to let you know that I responded back to your questionnaire. Please look for the subject line, blah, 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 from blah, 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 blah. What's in this email is this, this, and this. This is not an automated response. Thank you. Or talk soon. And then my name. And it's your choice by then. If you feel like what you see is great, respond back. Give me feedback. Because I can tell you this 100%. I know this with certainty. That if you go in other ways, like the individual I spoke to today, client sent me a text. His situation in the first couple of sentences, oh, so you are a real person. And I said, no. I said, yes, I am. No, I'm not a robot or one of these machines and so forth. I wanted to almost say it in a robotic tone, but I didn't. But we were having a quick laugh about it. And it's better because I don't want to work with the robot. Yeah, but the machine told me that you would get 13 years and 14 years. No, cut that out. Cut that out. Nobody wants that. And so I'm able to help you hands-on. But if you're an individual who just submits a questionnaire just to submit it, maybe you're fearful of, oh man, this is going to be another answer. Well, I've done this already a million times. I know the results. I'm not going to get any. I'm going to get declined. No matter how much revenue. I see people are doing millions, billions. And the common theme is people will fill out these questionnaires and they become Casper the Friendly Ghost or Homer Simpson. You know that meme where he's like going in the bush? That's what I refer to. You'll hear me say that. But the thing is, I'm taking care of you from a human perspective and then a business second, period. You'll see that. I truly care. But the line of credit is only one option. And there are different services. Usually an unsecured line of credit, like I spoke to the individual and a couple of other ones today, if you're not looking at it, and I told him there's unsecured and secured. He told me right away, I'm not looking at secure this. I don't have this. Okay. So with the unsecured line of credit, you're usually looking at about 1 to 3% interest per month. And how we calculate the 1 to 3% is depending on your bank statements, how clean they look for about the last 6 or 3 months, however much we need. If we need a recent business tax return, I'll look at that. And especially the profitability, it's less of a factor. But I want to see who you say you are, and I want to make sure everything lines up. And then a few other things, maybe an online application or PDF. Usually it's online but it's usually online. Credit card statements, if applicable. Okay. So I want to see all of this. I want to look at average daily bank balance. Will you be able to sustain the repayment of it? And even if it shows that you can, how much of a repayment are you willing to pay? Are you able to pay back? So if you're expecting to have a low $100 a week repayment, but you can't even keep $20 in your bank account, you can't even keep an average daily bank balance of that. You're struggling between $20 and $100. We don't trust you. We don't say, hey, yeah, but you're doing $40,000 a month in deposits, but you're actually doing $25,000 in revenue, but you're only sustaining $300 in average daily bank balance. And with a 740 FICO, but you don't have any minimal inquiries. Not everything like that looks clean on your credit. Your average daily bank balances, your debiting and crediting. Why is more money coming out than what is going in? What you're saying you're doing is 40,000 in deposits. Why is about 60,000 going out? You're just head above waters, and a $200 average daily bank balance to me and everyone else is negative. That's what it really looks like. And so I need to know this stuff before I submit it to the lender, whether you submit it to me directly or it gets uploaded online where we see it on our back end. I told the individual today, I give them a couple of options. You want options? I deliver 110%. And I will be working on more questionnaires after this is done. So if I haven't submitted them yet, taking a break, but I'm going to go full throttle, try to get at least another 20 to 30 done. And so I want your guys' energy and time to be very punctual in a way that we're both respecting it. I want to work with somebody who has that in mind, who doesn't want their energy and time zapped like mine. And even if you don't completely understand that, it's okay. I'm not going to shy away from you, but I want you to understand that I don't fool around. If your time and energy is being put into this and you're committing and you're showing it, I'm going to put it. It's enough that you're saying I'm going to fill out that questionnaire. But it's more to say, hey, I just responded back to your email. I sent you a text. That shows a little bit more commitment. Even if you don't, I'll still go 100% for you. But if days go by, weeks go by, I told you this, you ignored it, you didn't even tell me, hey, I'm not needing funding now, but I'll need it in 6 months. That's better than nothing. I don't mind that. That's okay. But with me, you get a lot of content. You get the most up-to-date in the market with these different products, which I'm going to jump into the second one now. But before that, with the line of credit, 50,000 example, you take out only 10,000. Payback is on the interest of that you're repaying it over the 6, 9 to 12 months or 18 months. And we calculate it on a weekly remittance or on a monthly. Sometimes it's a daily. We have to look at that and assess your risk on what you're able to, because some people can't pay monthly back. It makes more sense to pay back weekly. And even if you can pay back monthly, weekly would make more sense. It's better to take out more money, I'd say more times in a month, like 1 to 4 at least times, than one huge payment at the end of the month. And that's on a lump sum. On a line of credit, it could be a little bit less. But you don't want to have an unexpected. Sometimes if it's variable, a lot of it is fixed interest. You do not want to have a huge payment. Let me ask you that. Do you? Some people, they say, I don't want to have 5,000 per month because they have projects. They probably fix and flip, or they have other positionings that they can't do that. They're paid on different terms. There's a reason why these work the way they do. So that money goes back into the account when you use that 10,000. So it becomes the original 50 or so thousand. It's not like you lose it. So you got to put it back into the account. You can continue to take it out and use it whenever you need to, when something comes up. Now, you have the merchant cash advances. They're called MCAs, cash advances. Some people like to call them payday loans. They're not 100% exactly like what you would expect on that side. They'll say hard money loans, shark loans to a degree, yes, if you're not paying attention to what you're getting. A lot of people will just try to please you by giving you a better term and probably the right kind of funding or more, just so they can make money and they can charge you a higher rate. So be careful of who you go to and who you trust. And so there are also hybrid cash advances, which is my favorite. And this is where a merchant cash advance, let me tell you this first. This is based on your credit and even debit card transactions. So you're giving up a future percentage of revenue in your business in exchange for funding. So whatever you're making in sales one day, let's say you make a lot, let's say 1,500, and then they're going to be taking out more. It could be fixed or variable. Usually it's a fixed percentage, but it can vary depending on your risk and what they see in the market. So if they're saying we're taking 15% of that 1,500, now you know how much is being paid back to the merchant or the lender. On a lower day, they take out less, way less. So it can change. So it helps in a way when you're making less sales per day. So you're not going into like overdrafts, or chargebacks or bounce checks later on. And now you're going negative into the account and you're flooded with operational expenses and overhead. And you can't even grow because you have to pay more towards your expenses, and what you're profiting on is far less. So I get all that. Truly, I do. But you have to understand that there's also another way, like a hybrid cash advance, that doesn't just look at your credit card transactions. Traditional merchant cash advance looks at you and say, are you taking credit card processing? Are you doing credit card transactions? That's what we evaluated on. But with the hybrid cash advance, we can look at credit card transactions, but it's not the only way that we accept revenue or cash flow. We look at debit, we look at any other types, ACH, checks, deposits, cash. We can look at all sorts of ways, which is an advantage to the business owner in case you're not making so much with credit cards, right? We have this other way. If your customers aren't always paying with credit, I see that can be a problem, and you may not get as much money as you could have had. So the hybrid cash advances are great, and you usually get a daily/weekly repayment. That's how they all work. Monthly causes too many defaults in the cash advance world. Repayments are based off of, well, let me talk about the interest. Interest, we usually calculate it on factor rates. It's not an actual interest rate, or if you want to calculate it in an AIR, annual interest rate, or the APRs. So what it looks like is it's a factor rate or a total payback, usually between 1.19 to 1.7 or 1.19 to 1.49, assessing the risk of your profile. Revenue is usually what it's determined on. We look at FICO if need be. We'll look at time in business or industry, and even deeper in the bank statements. And if we need a recent tax return, we'll ask for it. It's possibly year-to-date financials. And that would be if we were asking, if you were wanting more funds over 150,000 in a lot of cases, sometimes a little bit underneath 150. But usually over 150K, we may ask for a little bit of that. So just be prepared for it. But anything under that, low documentation, usually 3 months or 3 to 6 months, 4 to 6 months. And with copy of your driver's license, a voided check, sometimes credit card statements if applicable, for us to see that. And then, like I said, a recent tax return, not always necessary. Depends on how much funding you're receiving and how much you can get and what you're looking for. But it's very low doc, hassle-free. Bad credit is acceptable without collateral. So when you get these without collateralized options, it's usually with a medium to a higher rate. And that's just the expectation because the lenders are assuming 100% of the risk. When collateral is involved, then you're putting up something you can, and there's more value in that than just looking at your revenue. So if revenue is fluctuating or it's not in a position, but you have invested equity that we can make an appraisal for, or in a property, and probably seize that or take that properties, or look at the equity, and also equipment, inventory, accounts receivable, financing, and so forth. And we'll look at that and we'll make an assessment. Maybe we'll need a combination of the two just to make it satisfactory, or more, two or more. But we'll do all this. We'll take care of it for you. And then, so you can also say that's an interest, I guess, 19 to 70% or 19 to 50%. Sometimes it goes over that. Just understanding what your risk profile is. So whether you get 60%, somebody else got 20%, there's a reason behind all this. Now, that's the merchant cash advance hybrid in a nutshell. I have created content on this down below. Make sure you look in the description. I made videos on a video series on SBA EIDLs versus unsecured term loans versus merchant cash advances versus private lending options. And I may make some more in the future. People are really enjoying that. In those videos, they're not just 5-10 minutes. And I know you're like, oh man, they're jam-packed. If you didn't understand all this before, oh man, you're going to be like, Man, really should have listened. So I wish I had somebody like that who would tell me. Now, there are more products. You have equipment finance. I won't go too deep into all these because we're running on time. Equipment financing, traditional leasing, leasing to own, full out buy the equipment. There are ways of helping lower your costs at the end of your term. Sales lease back. You can give up a piece of equipment to receive equipment. It's pretty cool stuff. Actually, one of my best recommended ways. If you have that, you can use as collateral or multiple. Something maybe that is appreciating. I wouldn't say 100% appreciating in this market. Just the way it works. There's a demand for a lot. There's just less of a supply. Yeah, supply chain issues. It's hurting. Like I've seen it. But what you have to understand is there is no better time than right now. And don't scramble. Don't say, oh man, this guy's telling me to go get funds. Don't just go. Have a strategy. Sit down with yourself. You know, when you put a business plan together, if you did, or when you put your mission statement, your value statements, your focus statements, your reason why for doing what you want to do, and so forth, you have to sit down here and be like, I want to look at my, first of all, I'm not just going to write it down. I'm going to look through my budgets. I'm going to look through my spreadsheets. I'm going to look through my pie charts, my graphs. I'm going to go see what I'm spending the most amount of money on and ask myself, why? How am I doing this? And then what do I need to do about it? And then when is usually what you want to say, hey, by this point, I need this amount of funding. I'm running low on inventory, and a lot of people purchase this product. I make over 350K just because of this one product over the duration of a 6-month time frame. And then on 1 month on a summer, peak so high. So I have to be more prepared for that. And then my marketing and advertising that drives all of that. That I need an additional 100,000. And then I may need a piece of equipment and maybe a cargo van so I can help somebody on fleet go out there and spread the word or send some equipment if we're also delivering. Blows up your business overnight. And I've done this for other businesses because I've worked in them in the 9 to 5. So I know how it works. So that's just equipment. I'm not going to get too deep into that. That's another form, usually 1 to 5 year terms. And if you're looking for higher priced equipment, that's what I would recommend you do. There's a reason that's there, and you can get better terms, better interest. However, you can use working capital, a lump sum, perhaps even a line of credit. We can even have the two of them and then use it towards the purchase of an equipment. But there's a reason why equipment traditional financing is out there. You will also have other forms like the accounts receivable financing option, amazing stuff, unpaid invoices you can use. Give away to an invoice factoring company in exchange for faster funding. And I do that every day. I deal with the lenders every day. I have people submitting it. And they are so grateful because they have more control over what they want to give up. So if we can give you up to 85, up to 80 or so more in financing and up to 95% on aging receivables, that's a bargain. And the rates today in that industry is prime rates about 4.75% plus 2%. How crazy is that? You're not even paying over 8%. So you got a line of credit for 12%. You had accounts receivables. You didn't want 12%. You're still looking out in the market for a line of credit, not a lump sum. But you have equivalent enough of the accounts receivables to get you that 250K you wanted in a line of credit. So it makes more sense, or over 250K, I should say. Up to 250K is usually without. So you want 350K. They're offering it to you at 12% here, but we can get you an AR line of credit for about 8%, but you only have to give up about 300,000. And we look a little bit at the aging receivables. And I get this sounds a little confusing, but I know all this, and I'll speak it to you in non-broker ways. Don't worry. But there's such a huge advantage. Hi, Ra. How are you doing? Happy Friday. And so what I want to help you understand is there are alternatives outside of the EIDL, 5 million, 10 million. And so accounts receivables is just one of them. You have a couple few. I could have brought it up on my screen. Actually, I have it right here just so I make sure I go through them all, and we'll cover hopefully here before the 45-minute mark. 1 second. In the meantime, if you guys have any comments, questions, or concerns, please feel free to voice them for me in the comments. I have quite a few people who are processed through the SBA and will be receiving funds here shortly. We communicate with them, even if sometimes I don't always communicate with you at that point. It won't be like continuous. There's a team that we have as well. I will at times then jump in because it's my time to do that. And I'm always up to date what's happening in the underwriting process, what's happening with the lenders. They always communicate with me directly, and they'll probably communicate with someone else, but we're all in communication. And so we're all helping you out one way or another. Sometimes maybe 3 days go by, maybe you haven't heard from me, but you will. So you have the SBA. Of course, the SBA 7A. I won't go too deep, but that's another option you have. One of my most recommended options for the SBA is what's called an hybrid SBA. AR line of credit accounts receivables? Correct. Any line of credit available for a 2? Are you saying like 2 million? Now back to this part. One second. I'm looking at another screen you guys can't see at the moment. It's just my my product list that I put together. And it's a little confidential stuff because I have it for clients. We have a hybrid SBA loan, and I made a video on that just the other day. So go watch that. I talked about the EIDL loan versus the SBA 7A options, and one of these being the hybrid SBA, where we can evaluate you for a term loan that's unsecured financing, unsecured line of credit, unsecured cash in advance, of course. They're usually unsecured. And in the meantime, while you're getting approved and looked at for the SBA, you can take that funding and you can use it. If you need immediate use for it, you can go ahead and use it. And then while you're getting approved, and if you don't need it right away and you would rather wait 6 to 8 plus weeks to receive your funding, 1 to 3 plus months in cases with this SBA loans, that's fine. But for somebody who needs it, and the thing is, we can use the funding you receive with your SBA and then pay it off with your, you received 200,000 with your line of credit, or you received that in the meantime. Well, you got the proof for the SBA at this amount. We can pay it off. We can just transfer it over, and there you go, taken care of. We can pay that off. So there are options available. That's just one of the many SBA 7A loan options. There's a 504. We're talking about 10 million. That's a 504, usually for bigger real estate, commercial, and I wouldn't say land exactly. Commercial real estate is what it is. You can build it from the ground up. So that's the other part of it. Looking for land to build commercial real estate. But in land and a few other spots, then the SBA 7A may be more of a factor. Let me go down my list here. We spoke about the MCA loan, or the cash advance, I should call it, not the loan. It's technically not one. Option 2, unsecured term loan. I spoke about this, but you might have higher interest. You can receive 1 to 2 years. Refinance up to 2 MCAs if you have any positions. We want 2 years time in business, 660 plus FICO, but realistically, like minimums, it can be if you have high enough revenue and not depositing just the minimum and have low average daily bank balances. But we want to see strong enough FICO. I'd prefer 680 and above. 660 is helpful, but 25,000 deposited monthly into your business bank account, or 300,000 in annual sales. And what I want to say is, if I'm seeing you depositing 25 and above, or just the minimum, but you're taking out more than what you deposited, but you're depositing it multiple times in a month, maybe you're depositing 25,000 over the month about 4 to 5 times. And so maybe you're doing 100,000 per month, but what you're doing is you're taking out close to 100,000 per month, or you're doing over 100,000 that's going out of your account. And I also check and see what's being taken out. How are you using this funding, and where is it going to? And why are you saying you're starting with this bank balance and you're ending with this? Well, you're going into a negative. If it's not happening now, it'll happen. So now let me come to the comments. Any line of credit available for a new LLC? Yes, definitely. There are options available. What I say, I think you've heard me say this before, is yes, a new LLC is part of it. When you transition, a lot of business owners, like myself included, when you first start off, like a lot of us do, especially if you're not acquiring a business, or if you're starting something from the bottom as a sole proprietor, Schedule C, or however you look at it, 1099. What's happening is then people are transitioning into a different entity, probably going to an LLC, S Corp, C Corp. All right, I see all of this. I can go on forever on taxes if I wanted to, but that's not what the topic is. But what I say to people is, how much time have you had in business? And more importantly, do you have the sufficient enough bank statements that we can take? That's what's most important. Have you been in business for about 6 plus months, 4 plus months? Okay. Second, do you have a business checking account you're depositing into frequently, over 3+ times preferred per month. And how big, how many deposits, that's another question I look at. And then we can make a determination off of that. Let me move. I know it gets a little dark because of the HP computer, so I apologize for that, guys. So here, and I'm bringing it up on screen if that's okay. Thank you for giving access to StreamYard. Usually the way to see these kind of comments is if you allow StreamYard access. Got it. Yeah, I mean, it's doable. The thing, like I said again, with what I just mentioned, well, out of 681, 720, 702, that's good. Yeah, that's what I like to see. It's way above the minimum for a line of credit entry. Credit's more heavy with lines of credit in today's market. You definitely want to have above a 625. I'll tell you that right now. Like a 600 minimum will work, but where you're at right now with a minimum of 681, but the other scores make up for it. If we did an average of the three, that's what our lenders are also looking for. And then when we look at like FICO 8, FICO 9, these are the things that our lenders are making an evaluation for. And I see all that with my credit reports. I've been able to see it with consumer credit reports of other people. So when I make an evaluation of this, especially with credit repair, I'm able to dig deep into the reports. I'm able to see all of this. And so, yes, you are very welcome. Appreciate you for contributing. I solely do. I don't just say that. It means a lot. Credit, revenue, of course, time and business. Time and business above all will triumph credit. I'll say this again, time and business, because it proves a point. If you've been in business 10 to 15 years as opposed to just 2 years, or you meet the minimum of a year, like, we trust you more. Oh man, you have a pattern and you're stable making this money. You're stable doing this in revenue and profitability. Maybe profitability is less, but you're doing this on a monthly basis. It's proven. You have this lined up, these contracts, these customers, more customers, projection, you're going up. We just need to take you to the next level. That's what I love to do. So definitely have options. If you haven't filled out the questionnaire, which I believe you have, I still need to get back to people, but check that out. Let me open this again. All right, we're towards the finish line. Thank you all for sticking with me. This again is a spontaneous one. I didn't want to go live because I wanted to recover because I did a lot of video yesterday. But I care about you guys a lot. I want you guys to go into the weekend with some homework, and I'm going to give you guys that at the end. So you have the SBA options. Let me flip over here. Accounts receivables, as we spoke about, the unsecured term loan I just went into. There's up to $25K financing with a cash advance, but the rates usually are higher, usually between 1.19 to about 1.69. Most people get an average of 1.38, but with lower revenue, you're assessed as a higher risk. So that's when you get into the 1.4, usually 1.45 to about 1.7. That's just the honest truth. Better revenue, better time in business, better everything. You'll get lower interest. You'll get like 1.23, 1.21, 1.25. And that's great. 23% interest on secured financing. Holy, like that right there is a deal. Like 23% interest. And if you had collateral, you're like, oh, well, I get 23%. Maybe I just want to use collateral. Or you don't. You're like, I'm going to be doubling and tripling, quadrupling my money with this. I'm going to be profiting. What does it matter if I take 23% interest, but I'm making an extra $200,000 per month over the next 10 years? Consistently, oh my, that's a lot. That's a lot to ask for, but it happens. And then there are individuals who do it just for the season and say, hey, I just need it for the next 6 months. I need 6 months. I'm needing marketing money so I can then take an extra 30 to 40,000 in revenue, so I can also help pay my employees. Domino effect. It's a no-brainer. But when you're just surviving, there's no benefit. I don't have an immediate use for these funds. Why just let it sit in your account for 8 months, paying all that? Hell yeah, it's expensive. So I never tell you otherwise. I never say, yeah, take the money. I'm going to loan shark you. I should create like a little sitcom, should have a couple of you guys in a video with me where we just present an interaction of a loan shark. No, I'm kidding. But you just have to be very careful. So I have that there, and then I have 1099 gig worker down below. All these services are different, and I'll lay them out here, and especially if you fill out the questionnaire. I already went into the business line of credit. I give you multiple options and examples. and especially in the questionnaire, I give you those examples. Accounts receivable financing, I break that down very thoroughly. I won't do it all here. Home equity line of credit. That's a big one that a lot of business owners end up doing. Wouldn't it? I'm not much of a on video kind of guy. I remember when my cousin came to visit from California, I was just about maybe I think 12 or 13. So it was about 2004 to 2005. We've already been here for about a year or so. But he was like into the creative side of his brain, how it works. Now he's in advertising. He works for my cousin's husband, who owns a CBD company, huge one. And we see each other from time to time when we visit one another, whether I go there or he's in here visiting in town. But back then, my cousin, her brother, who's the creative guy, and now he builds websites and all that for his company. He would make videos, like little recordings, just on his phone or on his camera, and he would put it like in black and white and have some like suspense in the background. He like put it all together, like video production. It was so funny and it was cool. I was corny in it, like I didn't know how to act, of course, but I did little things here and there. And when we talk and we look back at it, we have such a huge laugh with one another. It's so funny. Looking at it, it's just we were so foolish back then, and he was older than me. But doing little things like that and incorporating the family to do it. But I don't want to attack anybody. I don't want to, bring a spoof out and say, hey, let's go to the ocean or let's make a video where there's a shark swimming in, and then like something happens and, guy bystanders walking in the beach, turns around, notices this shark just swimming the infested waters with the name Merchant Cash Advance on the top of it. But yeah, it definitely would be something really cool, but I just don't know if I would want to do that to that extent. So let me go back into this. The home equity line of credit, a lot of individuals do that, especially when they're starting a business. But when people are in a rut, that's when they really turn to it. That's the common statistic. Excuse me. But just be aware of what you're doing when you do that. And I have recommendations on how to do it. Online bank term loan. If you qualify for not traditional banking, you could qualify for an online bank. That's where I would begin with first. However, the interest with the online ones are usually like 6% to about 26, or nowadays I say more about 7% because it's 4.7 plus 1 to 2% in a lot of cases. So about 7 to about 30% or so, but it's still minimal. You just have to compare and see if you can get the most amount of capital from it, because sometimes they're cap sized. Now, qualifications, a little bit of that I go into. Of course, FICO, revenue, collateral could be a factor. May not be, because with online banking solutions, they don't always look at the collateral base. Personal/startup loans. You have the asset-based lending option where we can take a look at your real estate. Do you have enough equity? Do you have properties? Do you have, what kind of properties? That's another question. What kind of equipment? Is it appreciating? Depreciating? You may not know that. We do. We see the trend. Or there's an industry we don't know how to deal with this piece of equipment. It's hard for a lender to take a risk on it. They don't know the market, or two, they just don't see where the market is going. It's just flat. And they're like, well, we're not going to get enough of a return of our investment in about 1 to 5 years from now. So all this is smart work. That's how I work. I work hard for you, but I also, the way I think, not a lot of people, I'm not saying this just to say it. I'm a very cerebral person, introvert, and that comes with a lot of power because I'm very thoughtful, observant. I take the time to read things. I'm always up to date on the latest things in the market, whether it's my own or somebody else's. I spoke today with an individual in the automotive space, and I completely heard him, even if whether he thought I did or didn't. I know he did, because a lot of people will say, hey, I hear you. I truly hear you. And I said a few things back, and it was funny because I was watching a show called Gotham Garage on Netflix, and I told them about it, and it brought this into relevance. And not because of the show, I've seen it there, but in other places with brokers and so forth. But I see the market. I see what COVID has done, and what after COVID is looking like. But a lot of these buyers, a lot of people out there are not willing to take a risk right now in this current market. Maybe if they came back to them when the inflation was less of a factor and this recession that perhaps you can be going into, because a lot of business owners, they keep things for a collection. They maybe wanted to turn it over, but they cannot resell it at a price that's sufficient enough. So there's a lot of stuff happening in today's market. Now let me go back into this share screen. Oh, you guys don't see it yet, but I'll get into the share screen in a moment. Asset-based cash out refinancing is an option. Equipment financing, I already talked about that. 401k IRA, that's a huge one. 401k financing, by far, has helped out a lot of business owners start a business from the scrap, from bottom up. Not saying acquisition of a business, that could be a factor if you don't qualify for like an SBA loan or collateralized option. Then you might have to mix a few amount of options on top of that, a 401k. You may have to mix a personal loan with an unsecured loan with a line of credit to get you the full 200,000 or however much you needed it to buy the business, maybe in the millions or 500 and above. But I'll tell you all this. I'll show you. Coming into my world is unlike anything you'll ever see. And I'm so grateful that the individual that I spoke to today, he said, I was very organized. And I'm so humble that you were able to say that. I really am. And I take the time. My processes weren't built in a day. They weren't built. Rome wasn't built in a day. What I built in my business was built over years of hard work, figuring out what works, what doesn't work. Like you guys do in your business, figured out that this doesn't work this way. I need to add more to this. I need to iterate this after it works. That's what you're doing in your business. You're figuring out something that works and you're continuously repeating it over and over and over. And then you're iterating it and trying to make it better and figuring out along the way what the data is telling you. And that's how you iterate with the data. That's what you should be looking at in your business before you come over here, speak to somebody like myself, waste my energy and my time, and have no idea. You just want to have information ready, which is okay. But when I ask you, do you know what these funds are going towards or what they will be used for? How much time do you need? I can't answer those. Let me come back to you. Okay, we'll then speak about it more then, because I can give you as much information as you want. But will this really matter to you? That's the ultimate question I'm answering in my brain. And so I'm very punctual. Just be respectful of my time, and I'm going to be very respectful of yours. And let me come back to my form. I also give you guys fixing, increasing your FICO credit score. There's also credit repair. You can do it without credit repair, but I recommend credit repair if that's the direction you need to go to. Sometimes you don't need it, and other times you do. So I give you guys those options. The credit line hybrid program. This is where you can get 0% interest for 6 to 18 months. And it's a 24-hour pre-approval. It's a credit card stacking program. So using business credit cards, and you'll be shown a very meticulous process. Pretty cool. Like I didn't know this would work. Like I thought I had already used the business credit card the right way to make purchases. But until I found out how wrong I was and I wasn't purchasing the right products from the right vendors, I was like, oh, this isn't even building my business credit. Or it was, but then this business doesn't work this way anymore. Huh. So I just wasted 3 months. That's how I felt. And so business credit can also be used to help you qualify. Flexibility, you can use the funds to do what you need to for your business. Even startup businesses can qualify. This is a true no-doc financing program. Application to funding is 3 weeks or less, so it's rather quickly. I know that's not as fast as other services. There's no upfront application fee. Credit approvals up to $150,000 per individual. And then it can be over if we even get into like the corporate side. Start dealing with things like Brex and then a few more other ones out there. No collateral is required. Ability to use a credit partner to qualify if you need, right? They can bring you on. You can say, hey, is it okay if you make me, if you put me underneath your account as a registered user, account holder? Well, we'll see. And you have to sort that out. Only you know how responsible you are with making the repayments, because credit cards can become higher interest, right? The interest on credit cards can skyrocket, especially if you're using multiple. And if you're using it for multiple purchases per month. But if you understand how you're able to make those payments, if you can make them much faster, it helps you. So just understand you don't get yourself into a financial situation and you're in a battle now. They take you to court. I've seen it in a lot of cases. Even if you're friends and if you're a family member, I've seen it. And don't fall a victim to I need the money, but if I just use this, I'm going to help build a business. But you don't understand exactly to the effectiveness. So 680 plus FICO, or I should say FICO and credit score on all 3 consumer credit bureaus is what we'll look at. Credit card 3 years with the 5,000 plus limit, and it must be a primary card is what we look at. Minimum of 2 open revolving accounts with a year and a half of good payment history. Under 40% utilization on all revolving accounts. So that's giving you a little bit of a cushion there. I mean, 40%. No more than 4 unsecured accounts open in the past 12 months. No more than 4 to 6 inquiries per bureau in the last 6 months. So 4 to 6 per, not in total. Preferably less. No bankruptcies within the past 7 years. No open unpaid collections, liens, or judgments. So I know there's quite a bit. But that's just the reality when you're looking at it at a credit-based program. This is what personal loans will look at. This is what even a startup loan will look at. Credit. So let me completely finish this and we'll go. Now I have a bonus, which is a building business credit video series. And I'll leave that down below. It might be there, it might not be. But SBA EIDL latest updates and help, I'll give you that. Employee retention credit. And there's quite a bit more bonus material, other services. Conclusion, bonus advantage, what you can get from all of this, and the conclusion really what it does. Let me move over here in a second. Take this out. Okay. What the bonus advantage does, or what the conclusion I should say, is it's like a roadmap. Like you already had a roadmap. You're like, oh, what do I do with all this? I know this is my best option, but what if I needed something else? Or what if I wanted to do this? At the conclusion level, at the very bottom, you'll see. Excuse me. So overall, what I recommend you do is you go in through this up to 2 million service. And here's why, just to reiterate the point. And then I say, well, after that, we can try to evaluate you for this. And if this one didn't work, then you know you have this other one. Maybe it's an SBA, maybe it's another form. And then I say what I recommend you should do because I can see all of this. I understand how you're using your funds. I factor that. I factor in the amount of time you will need and you can qualify for specifically. If you don't qualify for the amount of time you exactly needed and the amount you wanted, take what you can if it's possible. And then come back and receive more. That's the way a champion does it. That's a champion to me. Think about it. You go into the ring, you get beat the heck up, but you fought. You didn't get what you wanted out of it. You probably didn't win the amount, but what? You just went home and you cried? You have to be willing to take the hits. That's from the movie Rocky Balboa. It's quoting that statement. To get what you want, you have to be willing to take the damn hits. And I don't want none of this complaining, but the complaining. I don't mind you complain. It's just don't bring it up over and over. And if a lender, especially when you have an offer or they're trying to help you and they're like, what's the person complaining for? They should be grateful they're getting this funding. Being a crybaby. I'm not going to say it that way, but I'm sure they think it. We gave them a pretty damn good offer. So it makes sense that they don't want it because it doesn't benefit them. And if they look at it from a benefit perspective and a repayment, the repayment maybe is higher. If it's not, it won't benefit them having that funding, paying it the way they need it. They just wanted the funding to have it for reserve. But you didn't qualify for a line of credit to have reserves. So what do? We fix your credit reports. We take things off. We dispute. But we don't complain. We don't go apply to a different lender or a different provider. I'm going to go apply to 10 different places because this Michael guy told me I couldn't qualify or I couldn't qualify for everything that I wanted. Stop being a crybaby. I'm not saying this to be negative or aggressive. I'm saying this to give you tough love and because I care. I'm not rude. And if you think it's coming off that way, it's not. We have to reprogram our subconscious in how we think about things. Maybe you haven't taken personal development. I have. I'm not the personal development guru. But I read all of this stuff. I've read this book over and over, The Power of Awareness by Neville Goddard. Atomic Habits. No BS Time Management by Dennis Kennedy, and I've read all his works, and there's a lot more books than just these. This is some I have here. This is why I have no time for BS. I have no time for my time to be wasted, but more importantly, my energy. So if you come from a point of view where even if you're just submitting a questionnaire, with me, you should know you're working with one of the best, period, bar none. And there are very limited few in this industry. Like the guy I spoke to today, they were trying to get him a bullshit interest. A BS interest, excuse me, I should say. Sorry about that. But it's hard enough. Somebody has to deal with all of this. We don't have enough time in the day, energy, for it to be wasted. So I'm going to jump into the share screen here now, and I'm going to show you guys what this looks like on my questionnaire form. So this is the questionnaire form I'm going to leave for you guys down below in the description. And this way you can fill it out and you'll get a personalized and customized email response for your best funding option and options. Plus, you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster. Literally, you can fill this out in less than 30 seconds. I'm not a creditor. This information is safe and secure. Okay, I won't use it against you. I need it to understand what you qualify for. And if you give me less, I'll give you less in your questionnaire. And don't expect anything different. That's just the way the world works, right? And so you literally can finish this in less than 30 seconds. I'll evaluate it and analyze it. It's me doing it. It's not a robot. It's not a system. It's yours truly. Some of the services I offer, it'll look like this more or less. There's more of them that I do. Just put a handful there. Okay. So with everything included in this video, I went longer than I thought I would. I didn't want to stretch it out this long. But I hope you received value out of this. And you walk out of this into the weekend being like, holy, I need to really rethink what I'm doing. Not only from a business funding perspective, but your own business, because I do this every day. And just understand that I have your best interest at heart. I will go to extreme lengths with my lenders, with my underwriters, because they know me. There's a lot of benefit to that you guys wouldn't get anywhere else. That's the truth. There's a lot of things that I see that you won't. There's a lot of meetings that I'm a part of. And when I'm not a part of meetings, there are other things that I'm doing. And so you got to see the SBA EIDL, the current state of it. What are these 5 million, 10 million, 10 million alternatives, the term, some of these products. I even told you guys that underneath in the description will be like the unsecured financing options as well as more. I don't think I've updated it yet with the actual description. So that'll be there in time if you don't see it right now. But it will be there. And very quickly, I wanted to do a Q&A. This is actually what I wanted to turn the video into. So a few people have questions. I'm going to answer just like 2 or 3. I did quite a few yesterday, and I'll continue to try to do them. But people keep asking me, how can I get the longest term? That's a very common question. Instead of asking, how can I get the longest term, is how much of a term do I really need? Because everybody wants 30 years. Who doesn't? Everybody wants 20, 15 years. But can you get it? The term you get is dependent on I wanted to make sure I had all the factors in. So your time in business, of course, but most importantly, your term determines your factor rates, and then your monthly bank statements. Your repayability is another factor. But also, again, like I said, FICO and time in business, and then a little bit of the industry right now because of the markets. So those would be commonalities amongst all of them to determine the rate that you're getting. But more above all of that is those 3 is your actual FICO. So FICO isn't high enough. You may have the revenue in the time of business, but your FICO, instead of getting 12 to 24 months or more, you probably got 7 to 11 months or less. So What determines your rates? Again, it's similar to what I just said. There are different positions. So from the top, we have A lenders, A-tier lenders, and these are the ones that are like, we're looking for the best revenue, FICO, time in business. What industry are they in? Depends which lender I'm submitting you to. And they'll look at it and say, hey, yes, we can work with this, and we can get them a lower rate because they're doing 50,000 and above. They're depositing 25,000 or so and above, 300,000 in annual sales or so forth. They have 2+ years in business and a 700+ FICO. I want to work with this person. They're not fluctuating. Their average daily bank balances are good. And then there are other lenders who are B, C to D plus tier, and they'll say, I want to work with this file because they only have 25,000 and above, but not 50K and over. They probably have 625 and above in FICO and a year plus worth in business. And then there are other lenders who say they're doing 500 and above, but less than 600 or 625 and a little bit more. So I'm just going to answer those two questions for now. And I'm going to leave you guys with this. Please have a great weekend. If you need to replay this, please do so. Maybe on the weekend, you're sitting down. Maybe you're drinking a little bit of your adult beverage or a lemonade. But just take a second. Look through my email response if you received one. You don't have to respond back. We can revisit this on Monday, Tuesday, whenever that is. And then we can go from there. But if you got value out of this, I would appreciate you if you gave it a thumbs up. Please share it with others who you feel will get value out of it. Again, it can be a complete stranger, friend, or family member, but you just know you help them out, get educated, and then secondly, understand the proper way of getting business funding and where to go. And if you haven't subscribed, I would greatly appreciate it if you did, and click that bell notification icon so you do not miss any future videos I will be coming out with. That is all for now. Take care. Have a great weekend.